Welcome back to Investing Talk podcast.
It's great to be back. And today we are tackling a situation that is, frankly, baffling the market.
We certainly are. We're looking at a company that is the absolute backbone of the gaming industry. I mean, if you've played a mobile game in the last 10 years, you have touched their tech. You've probably touched it 5 times today without even realizing it.
Oh, easily.
But recently, their stock chart looks like a crime scene. It is absolutely plummeted. So the burning question we need to answer today is this a falling knife that's going to sever a finger if you try to catch it? Or is this the sale of the century?
That is the multi-billion-dollar question. We are talking about Unity software. And, looking at the stock chart right now, it's ugly. It's violent. But if you look under the hood, which is our job here, there's a fascinating turnaround story happening. It involves AI. It involves a total overhaul of their ad tech stack.
Okay.
And the actual numbers are telling a very different story than the panic selling we saw this week.
I love a good contrarian take, especially when there's blood in the streets. But before we get into the weeds, as usual, before we start, subscribe, like, and comment to this video to support the show. It really helps us keep these deep dives coming.
Yes, please do.
Okay, let's map this out. We are going to unpack the Q4 earnings beat, which was actually surprisingly good.
It was.
Then we have to talk about the disaster that was the guidance, because that is the smoking gun for the drop.
It is, absolutely.
We'll look at the technicals, is this capitulation? And finally, we'll get into the long-term AI thesis and the spatial computing angle that everyone seems to be forgetting. So kick us off. The headlines were screaming panic, but the Q4 numbers, they didn't look like a panic to me.
They didn't. If you strip away the sentiment and just look at the hard data, Q4 2025 was strong. Unity brought in revenue of $503.1 million. That's up 10.1% year over year.
And in this environment, with software spend tightening, double-digit growth for a mature company is solid.
It's very solid. And crucially, that beat Wall Street expectations. They cleared the bar. But, the top-line number isn't the real story here.
Oh.
The real story is what drove it. It's this platform called Vector.
Okay, let's stop here and really unpack Vector. Because I think most people hear Unity and they think game engine. They think polygons, lighting effects, coding. What is Vector and why does it matter so much?
So Unity has 2 main sides. Create, which is the engine you just described, and Grow, which is how developers make money.
Right.
Vector is the flagship of the Grow side. It's their advertising and user acquisition platform.
So it's an ad network inside the games.
It is, but it's smarter than that.
Yeah.
Think of it as the monetization engine. And this is the star of the show right now. Vector has seen mid-teen sequential growth for 3 consecutive quarters.
Sequential, meaning it's accelerating quarter over quarter, not just year over year.
Exactly. And that is incredibly hard to do in ad tech right now. But here's the secret sauce, and this is why Vector is winning. It's about the data loop.
Explain that. How does it differ from, say, a Facebook ad?
Well, Unity is the engine. They aren't just serving an ad on top of the app, they are literally running the app. This means Vector has access to proprietary runtime data. They know how players behave inside game.
So they know if I'm stuck on level 5.
They know you're stuck on level 5. They know you play every day at 6 p.m. They know you tend to quit if a level is too hard or if you grind through it.
And they use that to target ads?
They use that to target ads and to optimize user acquisition. They can tell the developer, we can find you players who love puzzle games and play for 30 minutes at a time. That is a level of granularity that a standalone ad network just can't match.
Because they don't own the engine?
Exactly. They don't own the engine. This is called a flywheel effect. The more people use the engine, the better the ad data. The better the ad data, the more money developers make. The more money they make, the more they use the engine.
Okay, that makes sense. It's a closed loop.
And it's working. That is why Vector is growing mid-teens sequentially. But that wasn't the only surprise in the report. There was a massive aha moment regarding the creative engine business itself, the classic Unity engine.
The create side?
The create side. It grew its fastest in over 2 years.
I thought the engine side was supposed to be saturated. Everyone who wants to make a game is already making a game, right?
You would think so.
Yeah.
But the growth was led by a massive expansion in China. We're talking nearly 50% growth in that region.
Whoa, 50% in China? That seems counterintuitive given the economic headlines coming out of there.
It does, doesn't it? But think about what's happening in gaming. Chinese developers are moving aggressively from simple 2D mobile games to high-fidelity 3D console-quality mobile games.
Like Genshin Impact.
Think Genshin Impact style. To do that, you need a heavy-duty engine. You need Unity.
So this is a structural shift in the Chinese market toward high-end 3D, and Unity is the shovel seller.
Precisely. It's not a blip, it's a trend.
Okay, so revenue is up, Vector is booming, China is on fire. What about the bottom line? Are they actually making money, or are they just burning cash to fuel this?
They are making money. Non-GAAP earnings per share came in at 24 cents. That beat the consensus estimate by 15.5%.
That is a significant beat.
It reflects a major culture shift inside Unity. For years, they were a growth-at-all-costs company. Now they are obsessed with margins. They're shedding weight and focusing on profitability.
Okay, I'm listening to you, and everything sounds fantastic. Revenue beat, earnings beat, China booming, Vector flying. But, and this is a massive, but the stock crashed. It tanked nearly 30% in just a few days. The market hated something. If everything is so rosy, why did the market panic?
That brings us to the guidance, and specifically the iron source headwinds.
Ah, iron source, the mergel that everyone loves to hate. Let's talk about the guidance disaster.
So while Q4 was great, the forecast for Q1 2026 was, well, soft. They guided for $485 million in revenue.
And what was Wall Street expecting?
Wall Street wanted about $489 million.
Wait, pause. They missed the estimate by $4 million. That's like 0.8%.
Right.
And the stock drops 30% because of a 0.8% miss on a forecast. That seems insane. That feels like pure emotion.
It feels extreme, but you have to understand the narrative. The miss was blamed on two things: normal seasonality, which everyone expects,
Right.
but also iron source headwinds.
Explain that. What does that actually mean?
Okay, quick history lesson. Unity merged with ironSource to build this ad tech stack. But ironSource had a lot of different businesses inside it. Some were high-tech, AI-driven tools, like the stuff becoming Vector, but some of it was legacy ad tech. Older tools, offer walls, lower margin stuff.
The junk in the attic?
Exactly. Unity is currently cleaning out the attic. They're actively deprecating, shutting down those legacy ironSource tools because they don't fit the new high-margin strategy.
So revenue creates headwinds because they're voluntarily turning off revenue streams.
Yes. They are trading low-quality revenue for high-quality revenue. But when the market sees the word headwinds combined with ironSource, they get PTSD. They think the merger is failing.
Ah.
They interpreted that soft guidance as a sign that the ad tech turnaround is stalling.
So the market saw ironSource issues and just hit the sell button without asking which part of ironSource.
That is my read on it. They missed the nuance.
But you're the expert here. Is the market wrong? Or is there a risk that this pruning reveals there's nothing left underneath?
I think the market is missing the forest for the trees. Look at the full year. Management isn't just looking at Q1. They projected full year 2026 revenue of $2.05 billion. That is 11% growth for the year.
So a slow start, but a strong finish.
Yes. And even more importantly, they expect margins to expand to 28-30% by the fourth quarter of 2026.
30% margins. That is serious software level profitability.
It is. The strategy is actually quite clear. Phase out the low margin junk, scale Vector to a $1 billion run rate, and print cash.
$1 billion just from the ad platform.
That's the target. So they are transitioning. Transitions are messy. Earnings reports during transitions are messy. But the destination looks very profitable.
And I noticed in the notes that they're actually generating free cash flow now.
They are, which is crucial. They aren't doing dividends or buybacks yet, but that cash flow supports their AI reinvestment. They don't need to go to the capital markets to fund their growth.
Yeah.
In a high interest rate environment, that is a huge safety net.
Okay, before we move to the charts, I want to touch on the moat. Because in software, if you don't have a moat, you're dead, especially with AI coming. What stops someone else from eating Unity's lunch?
Two massive walls, network effects and data. We talked about the data that loop between the engine and the ads. That is very hard to replicate unless you own a game engine.
Right. Google doesn't have that. Facebook doesn't have that.
Exactly. But the create side moat is even stickier. Switching costs. If you are a developer and you've built your game in Unity 6, you are locked into that ecosystem. You aren't going to switch engines halfway through a project.
No way.
It involves rewriting thousands of lines of code, retraining your artists, rebuilding your assets.
It's like trying to change the foundation of a house while you're living in it.
It's a nightmare. So once Unity wins a developer, they tend to keep them for years. That stickiness is undervalued.
Okay, that's the fundamental story. Robust core, messy transition, overreacting market. Let's pivot to the charts. Let's look at the damage.
It's carnage. I mean, from February 11th to the 13th, 2026, shares plunged nearly 30%, We're trading near $21.40.
That is a massive move for a company of this size. That's billions in market cap just vaporize.
It is. And it wasn't a slow bleed, it was a cliff dive.
When I look at a chart like that, I see what technical analysts call capitulation.
Capitulation is the right word. That's when everyone who was thinking maybe I should sell just throws in the towel and sells at once.
Yeah.
The drop was 9.62%, specifically tied to that restructuring news and guidance.
Right.
Signals high volatility, sure, but when you see a vertical drop like that, it often washes out all the weak hands.
So you think we might be near a bottom?
The conditions imply it. We are at multi-year lows. There is psychological support at these levels. If you believe the AI catalyst is real, this setup looks like a potential rebound.
It's the classic be greedy when others are fearful setup. But we have to acknowledge the momentum. There was heavy selling flow. This wasn't just retail panic. Institutions were selling on that weak guidance.
True. And we have to look at the broader context. The entire software sector has been weak. There is this lingering fear about AI disruption, that AI will write the code and we won't need these platforms anymore.
That's the elephant in the room. But before we get to the bear case, let's check the pulse of the market. What are the headlines saying? Because reading the room is just as important as reading the balance sheet.
It's a mixed bag, but mostly ugly. You have headlines like, what's going on with Unity stock Friday? Just pointing out the tumble on the outlook.
Yeah.
Then you have the bears taking a victory lap. Unity, the market is right. This is still a sell.
Ouch. Kicking them when they are down.
But then you have the contrarians. There was one piece titled, Unity, a meltdown worth buying. It was citing those robust game dev and ad tech prospects we just discussed.
That's the wall of worry. Markets love to climb a wall of worry. What about the big banks? The analysts?
This is what's fascinating. There have been no upgrades for 2025 and beyond. It's quiet on that front. And price targets have been slashed across the board. UBS went to $26, Goldman to $27, Wedbush to $30.
So they're lowering their targets to chase the price down. That's typical.
Yes, but, and this is the key distinction, the ratings themselves remain largely neutral or outperform. They are lowering the price target to reflect the drop, but they aren't abandoning the stock. They aren't slapping a sell rating on it.
They're saying it's worth less than we thought, but the thesis isn't broken.
Exactly. They are cautious, but not capitulating on the business model.
Now, I have to ask about the rumor mill. When a tech company with this much IP drops below a $10 billion market cap, the vultures usually start circling.
They certainly do.
Any whisper?
There is unconfirmed speculation about M&A potential. You look at a market cap under $10 billion. For a company that owns the engine that powers half the world's games, that is bite-sized for a giant like Microsoft or Sony.
I mean, Microsoft bought Activision for way more than that. Unity would be a strategic coup. Owning the engine means you own the platform.
It would. Again, totally speculative. But it puts a floor under the price in some investors' minds. And internally, despite the stock drop, there is optimism about Vector hitting that $1 billion run rate by late 2026.
Okay, so that's the bull case and the speculation. But we're fair here. We have to look at the dark side. Let's look at what could go wrong.
The bear case.
The bear case. Besides the guidance, what is the nightmare scenario?
The immediate risk is that the Q1 weakness isn't a blip. If that iron source headwind isn't just cleaning the attic, but actually a structural decline, that's a problem. If the legacy ad business collapses faster than Vector can grow, the whole growth story falls apart.
Right. If the hole in the bucket is bigger than the hose filling it, you run out of water.
Exactly. And there are seasonality issues. The gaming ad market fluctuates. If the economy slows down and ad spend drops, Unity gets hit.
But let's talk about the existential threat, the one that keeps developers up at night. Generative AI.
The text-to-game thesis.
Right. UBS and Goldman have both cited long-term pressures here. The fear is that AI gets so good I can just type, make me a first-person shooter set on Mars with zombies, and the AI generates the code, the assets, and the physics without me needing Unity at all.
Computer, make me a game.
Exactly. If that happens, does Unity's create moat evaporate?
It's a valid fear, but I think it's misunderstood.
Right.
We are a long way from AI building a cohesive, bug-free, AAA game from scratch without a framework.
So you don't think ChatGPT replaces the game engine?
No. I think the game engine becomes the assembler. You use AI to generate the texture or the dialogue or the code snippet, but you still need a physics engine to make sure the zombie falls over correctly when you shoot it. You need a lighting engine to make Mars look red. Unity is positioning itself as the toll booth for AI, They want to be the place where you bring all your AI-generated assets to actually make them work.
So instead of AI replacing Unity, Unity becomes the operating system for AI content.
That's the bet. And that leads to the spatial computing angle.
I was waiting for this because everyone talks about mobile, but nobody talks about the headsets.
Right. Whether it's Apple Vision Pro or the Meta Quest, building for 3D space is incredibly hard. Unity is the default tool for that. If spatial computing takes off, if we all start wearing glasses in 5 years, Unity is the Windows of that world.
That is a massive call option that is not priced in at $21.
It definitely isn't.
Okay, we've looked at the numbers, the charts, the rumors, and the existential risks. It is time for the verdict. You've analyzed the data, you've crunched the numbers. What is your bullish score on Unity software right now?
I'm giving this a 7 out of 10.
A 7 out of 10. That is surprisingly high given the 30% drop. Walk us through the final thesis.
Here's the elevator pitch. Unity is transforming from a messy conglomerate into a streamlined AI and spatial computing toll booth.
The toll booth thesis.
Exactly. You have to pay the toll to play. Vector has delivered growth for 3 straight quarters. That is the proof that the new ad model works. The margins are heading toward 30%, which proves they can be profitable.
Okay.
And frankly, a 30% plunge on a 0.8% guidance miss. That offers a compelling entry point. This is an AI-driven re-rating waiting to happen.
So you think the market overreacted?
Massive overreaction. It was emotional selling.
Okay, so for the listener who is thinking about catching this falling knife, what's the target horizon? Is this a day trade? A 10-year hold?
I see 2 plays here. Short term, there is a potential swing trade into the Q1 earnings in May 2026. If they beat that lowered guidance, which is a low bar now, the stock pops.
The low bar setup. Wall Street lowered the hurdle, so now they can jump over it.
Exactly. But the real value is the long term. This is a multi-year hold waiting for Vector to scale to that $1 billion mark and for the special computing wave to really hit. If they execute on that, this stock is not staying at $21.
So patience is key. You have to be willing to stomach the volatility.
Absolutely. This isn't for the faint of heart.
Well, there you have it. A beat on the fundamentals, a disaster on the guidance, and a stock price that has fallen off a cliff. Is this the moment to buy the dip, or is the market right to be terrified of the headwinds?
That is what makes this game so interesting.
Indeed it is. We want to know what you think. Is the market wrong about Unity? Are you buying this dip, or are you staying far away? Let us know in the comments.
And we will see you in the next one.
Don't forget to subscribe, like, and comment to support the show. Thanks for listening.